Hi, good evening. One more second and I'll be ready. Let me open the chat. YouTube. Hi, Ashish. Hi, Nina. Just give me one more moment. Yes. All right. Good evening. Hi, Ganesh. Mr. Peace or Miss Peace, I don't know what's your name, but if you can use your real name, that will be much, much appreciated. Hello. Hi, Adi. Hi, Bikram. Hi, Surya. Again, Mr. Eco Green, can you use your real name? It's better to communicate with real people than these names. Hi, Harish. Good evening. So we are on time now. So let's do first come first. Today, I was caught honestly by surprise because I totally missed the Fed governors meeting that yes, they're going to speak. I was under the impression that yes, it's going to happen maybe tomorrow on Wednesday. So any positions which I have, because I opened a green about $700-800, and then I opened my spreads, like I closed the far legs, and then Mr. or Miss Governor, she said about the balance sheet reduction and the shift towards aggressive balance sheet reduction. I was not expecting it, and bang, I lost about $8,000-9,000 immediately in about initial hour and a half. So that was really bad. So again, we'll check what can be done in situations like that. Maybe next time we can take a learning from this, like we always do. In between, we'll go through it. No worries. It happens. Hi, IG, Sat Shri Akal, Patel. Hi, hi, Vasudha. Hi, Srini. Good evening. Hi, Jeremy. Hi, Raj. Hi, Raghu. Hi, Shrikant. Thank you, Project Eco Green. Hi, Mr. Reddy. Hi, Nagarjan. Hi, Soma. Sat Shri Akal, Kulwant Singh ji. Hi, Raja sir. Hi, Mohan. Hi, Ganesh. Hi, Special. Good evening. Good evening. All right. So I was going through this sheet. So again, the moment it lost 46.60, there was open short which were there. Could have made much earlier the shots, but yes, I missed out. I waited until second half when it broke the second support 45.35, and then I was looking for a flush towards 44.90 area. It almost did 44.98, and I closed my puts over there. QQQ went below 366 and done. Apple hit the stop loss 177.30 and went down. So my mistake was to hold on to Amazon, which I did. I cleared my Boeing as soon as early. I held on to my AMD, I held on to my Amazon, I held on to my Tesla. And like, but I exited Tesla around 11:30, 11:29, but still it was loss. Facebook, I did add, it's still holding that 231 area of stop loss. So it's going to go really, really better, hopefully. Tomorrow we are going to have some serious numbers, some serious FOMC minutes which are coming, and FOMC minutes are really, really the game breaker here. Yes, Mitchell, I couldn't even sell Facebook on green. It gave me two chances, and both the times I was not able to close it because of my work. But now we can clearly see we are struggling to break 45.81, which is a very, very difficult area. Now it has become once again. So if I just close this, now let me just clear this up. Let me just change this to maybe dark blue. So if you see this area, no, no, this area is a area where it is struggling. It struggled right here, not able to recapture the regression channel. Here it recaptured, but kind of faking out. It's a evening star, which is continuing. Today it has a bearing engulfing candle. Again, missed on the regression channel, testing the 12 EMA. And now there's no actual support here. Support is around 44.58 area. This is a weak support, which is being tested right now. About 45.12, 45.13. But it can easily lose that, like 45.16 now. It can easily lose that and continue go down. Tomorrow in the FMC meeting, few things are really to be noted. We might grind before that, and we might move up, try to back test, because we failed this regression channel line and the Fibonacci of 61. So there's a possibility that if Fed, again, that's a 20% possibility. If Fed says that, yes, we are going to do a balance sheet reduction, let me use annotations and let me go into it. Let me just use paint to explain this. Okay. And let me use annotation. Annotations. And please be mindful of the information which I'm sharing. If you have any other perspective, any other thought process, do let me know. You can discuss that in the chat, or you can discuss that in the Zoom interaction, what we do at the end of this. So right now, the current balance sheet is $9 billion. I'm explaining this because it's really important to understand this, to understand how the market will react after the Fed minutes. So imagine you have a balance sheet, or imagine, let me clear this. Imagine you have assets in your balance sheet and liabilities. Like if we do a simple accounting, assets is where you are making income. Liabilities is where you have like a debit on your or credit on your head. So what Fed has done is Fed has a liability of $9 billion on their balance sheet. Why $9 trillion? Sorry, $9 trillion. What they have done is they have printed $120 billion per month from March 20. And if you compare the chart of SPY from March 20, you will see it has seen exponential growth like this. And in the liability section, because they are printing and they are buying the bonds. So supposedly there's a company called Company A. Company A issues a bond of 10-year, and they're giving an interest of 0.05%. What Fed did was Fed printed money and they put that as a liability on their balance sheet and bought from Company A. Now Fed has Company A bond. Okay. And they're going to get a return of 0.5 after 10 years. So these bonds were short-term bonds, long-term bonds, some corporate debt. There are multiple instruments through which this amount was issued on the balance sheet. Now, with all of this, company has, let's say they issued a bond for $10 billion. Now, They printed $10 billion, and from $120 billion per month, they have given $10 billion to this company A. This company may invest in the company or in the equity or in the real estate or in the like whatever way they want to. So now this company has seen the growth, and majority of this was pushed into the equity. And that's the reason S&P went up like this. Now tomorrow, they want to reduce this $9 trillion on their balance sheet. They want to do it aggressively. Now, last time when they did, they were doing 10 and then $15 billion. Even then, market got volatile and could not handle it. So they were not able to clear up the balance sheet. At that time, the balance sheet ended around $4.6 trillion. Since COVID, it has exponentially grown, and now that balance sheet is $9 trillion. So tomorrow, if they say they want to increase this balance sheet reduction by reducing the exposure to equity by $25 billion from bonds to about $75 billion, and bonds which are maturing, maybe $100, like net $120 billion, adding all these three numbers. If it comes around, market will not like it. Market cannot, because all this money made the market move higher. Now, this money is invested into the big caps, Apple, Microsoft, Google, Tesla. Tesla is the biggest beneficiary of it, Tesla and Apple. And Microsoft, if market has to reduce or bring that money back, if this company has invested in, let's say, Amazon, Apple, Tesla, right? And it has to pay back now $10 billion, from where that money will come? Either it will come from selling the equity, selling the real estate, selling the assets which were purchased, right? So the supply of these stocks will increase substantially. And when there is a supply, this is a supply because of the pressure of the balance sheet reduction. There's a natural supply, like when people try to book profit, that's a natural supply. But this is a fake, like we had the fake demand when the company A got that much of liquidity. Now we have the fake, what you call fake supply, when the company A has to sell because he has to meet the guidelines to meet the balance sheet reduction of the Fed, to pay off the Fed. So when you have all these companies, now mid-cap sector, which was the growth sector, they've already been decimated. All the growth stocks, if you look at them, they are now like trading around 60 to 70% of their all-time highs. So it's not easier to raise money from them because they do not have that kind of value, right? So now if they don't have that kind of value, from where this $4.6 trillion will come? It will come from Apple, it will come from real estate, it will come from Tesla, it will come from Microsoft. So as soon as this balance sheet will hit, there will be a natural demand. Let me clear all this. There will be a natural demand to buy, which is there. Against, there is a natural demand to sell because people will try to book. Plus, there will be a fake supply to meet the balance sheet. Now, this natural demand should be in the order of $120 billion, and natural supply maybe $50 billion. Like, and if it is $120 billion, this could be X number. We are worried about this Y. If Y is somewhere in an area where the combination of the natural supply, which is the selling, plus the combination of fake supply overpowers the natural demand, market is going down. It's simple economics. You may try to find out, read out something else, but I have given you a very simple explanation of what is going to happen. Is going to happen as soon as tomorrow if we have the FOMC minutes. This is the number which is going to be clarified in tomorrow's minutes, what they are eyeing for. This is going to be really, really important. Don't look at Twitter, don't look at TV, look at the Fed minutes, what they are targeting. That's it. If you understand this, you can make serious money out of it. So today, my focus area will not be on stocks. I will be focusing on the index, maybe a few levels where we can go and figure out what can be done on them. And very clearly, which stocks can actually be really, really, what you can say, at the edge of breaking their so serious high valuations. Now I'm going to share the Zoom link right away because I want to discuss this before we go and to discuss. I want to spend 15 minutes here. After that, we can discuss the stocks and the index levels, right? So if you are interested, I'm sharing. If you have any questions, if you have any other viewpoint, you can join and clarify or share your thoughts. I'm sharing this right away in the chat. You can join in and we can discuss. Yes, I trust them, Daniel. So if anyone of you have a different opinion or a different school of thoughts regarding this balance sheet reduction, please come up. Because asking questions in the real-time market, I have a full-time job. I cannot do that. Hi, Surya.
Hey, Nal. Good evening. So quick question. So balance sheet reduction, right? When they bought the bonds, those maturities around 10 years, isn't it? Don't we have?
There are bonds which approximately of $260 billion per, I think, quarter or something, which is going to get mature. These are long-term 10-year bonds.
Which were issued way back. That's what you're saying, right?
Okay. Yes, yes. These were like issued by the corporates way back in 2010 or 2012, aroundish area, because at that time the balance sheet was QE3 and they were adding on to these debts, which led to the 4.6 in 2017. Please, if you're not speaking, mute yourself. I'll allow you to not unmute yourself. But if you're not speaking, please mute yourself. So in this case, we have a 10-year bond, which was maybe issued by a corporate called as ABC INC. So they issued 10-year. Now that is going to mature. This will take off $260 billion from the balance sheet. But this is $9 trillion. There are not so many bonds which are getting matured at that period, at that time, right? So there will be some corporate debt which needs to be resolved. There will be certain equity dollars that needs to be raised to return back to the money, to the Fed. So these are not all the bonds. These are the bonds which are issued 10 years back so that they can reduce the, like they can do the maturity. Plus they were also thinking to pre-mature some of the bonds, like redeem the bonds. Because they have the bonds, they can sell them in the open market as well.
I see, that makes sense, because I was wondering, they might have more time, but usually if the bonds are expiring, only that company's equity would impact, or in general market will have trickle effect in that.
Why just let me just show you one thing. Let's go to SPY because ES is a little difficult.
Okay, Pa. Good night. Okay. Yeah, I need to have my food and then I will sleep. Thank you.
Arish, can you mute yourself, brother?
Oh, sorry. Sorry, no.
Right here, we had $4.6 trillion. Okay. Now, when the Fed was infusing that money right here, until this moment, until March 15th, they've infusing. Look at the market. It's just going up. Now, the only thing which changed somewhere from 2020 to 21 was that money was not going into the mid caps or high growth stocks. Money was going into the 5 or 6 big stocks only. And they were pushing the index really, really higher. Apple almost got $3 trillion for what? Like they are still 100 billion in revenue. Walmart is doing $150 billion revenue per quarter. But the valuation of Walmart is $400 billion. Valuation of Apple is about $3 trillion. So that money came in and was poured into all these companies. So if money will be taken out, money will be taken out from the bigger companies, and that will impact the sentiment. Like if you see Apple is going down $10, $20, what will be the impact on the other stocks? That is going to hit the sentiment. Again, it may not be a knee-jerk reaction. It may happen slowly and steadily. And if there is a reasonable demand, because there's so much of liquidity in the market, and that's what is causing the inflation in the real estate, inflation in the commodity prices, plus there's the issue with supply and demand. So Fed has no way to control, because if Fed do not control this issue now, it is going to have a serious impact on the employment, serious impact on the consumer spending, and it will lead to a recession, which will be of a totally different scheme of things, which we have seen in the past. That's why every statement from Fed is pretty clear. They are hawkish. They are not going to support the market like they used to be. Did I answer you?
Yes, thanks, Naval. Thank you.
Anyone else? Ms. Rajkaur, split does not do anything to the company. Again, the split, if you look at the Tesla chart, like people are so excited about Tesla, but let me just show. Again, I posted my views in my channel regarding Tesla. Some of you may not like it, but this is Tesla, which is trading at around $70 to $80. What exactly happened between this and this? Nothing much. They just increase the production. That's it. Can a company, this company was trading at $70, went on to make almost $1,000 just because it was split. Like if you have $100, right? If you do a split of $10 each, does it change anything towards the company? The answer is no. And you have seen the same reaction in Amazon now, in Google, because now there's no free money. Nvidia, Apple, and Tesla really gained from it. They had the free money coming to them, and all the corporates were doing, or the big fund managers were doing, were unnecessarily buying it. It does not mean that you are making, like you're doing anything which changes the fundamental of the company. Nothing. If balance sheet reduction is going to be there, an aggressive one, Tesla, Apple, and Microsoft will be the biggest losers from it. Harish, if there were no summary notes by Fed, they are going to be notes issued in this minutes tomorrow. There were no summary notes in Fed 16. They are going to be issued tomorrow. See, I do not believe in long-term investments, so I'll have no comments on that. But yes, you should always hedge with certain uncertainty, which is coming like that. We might have to see some serious imposition. And again, let me also do one thing. Let me, the people who love the flows. Let's look at some flows today. Let's look at Apple. Okay, and I'm going to take Apple anything above $500,000. Okay, so we have some Apple. 180 call is a sell. It is starting at $4. This is 13 May. $500,000. $2.5 million, again a sell. $2.27 million, again a sell. 175, it's a sell because the IV is low. Whenever the IV is low, it means that they are not aggressively buying it. It's being sold. It looks that they are added, but you need to go and check. I've checked it. That's why I'm going through all this. They're all sold. If you click on 185, 2.3, 2.3, 2.3, IV is 24. Let's look at Amazon's. And these are all trades which are above 500,000. 34.30 in the morning. This was a put which was entered at 33.45. Somebody closed this. Then I did like 3 of stocks: Amazon, Apple, and Tesla. I was looking at Nvidia, but I could not evaluate it in detail. These all calls, like 3100, these calls are being sold. The stock is at 33.47. And these are not like, these are $7 million. So why you think people will sell their calls when they're in the money like that? And these are not small dollar amounts. Now let's also look at some ETF. Let's look at SPY. Uh, 445 puts. Let me figure out, because I did not check SPY. Let's look at 450 puts. There's only one. I want where we have consistency. See, wherever you see the IV is low, 99% of the time they are being sold. That's one thing which I've realized. These are all whites, meaning there is either closed, all these calls are being closed, or puts are being added. Let's look at Tesla. Again, we have to look at the open interest. Again, I'm not trying to set up something, but all these calls, Tesla 715, 1250, these are being sold off. Tesla IV is 55. It's not good. And these are like, you have to individually go and check. These are not like near term. These are puts which are being sold, or calls which are being sold. There is not always a buyer. It's the market makers which are there to manage the liquidity. There's not always the buyer. Market makers are there. Like if you try to do a spread of uneven strikes, do you think that people will be there to buy at your price? No. What they will do is they will create a spread. Market makers, it's their job to provide you liquidity. If you're looking for something, it's their job to give you an option. So instead of $1, $1.1 spread, they will give you 50 cents. If you're interested, you need to buy at a lower price so that they can make money out of it. So there's always market makers on the other side. There's not always a buyer. There are buyers, but not always. Market maker is always there. It's up to them whether that's why all the transactions which are there, they go to an exchange and go to the market makers, and either exchange finds an equal transaction, equal buyers from the bidding process where we place the orders, or the market makers like Citadel, who gives you an opportunity and do a trade. Their job is to manage the liquidity. So keep an eye. Again, everything depends on the number which I explained. All right. So understand that. Do not preempt your mind. Understand what is being said in the FOMC minutes and then react to it. Do not preempt your moves. Read that maybe for 15-20 minutes, read that thoroughly, understand it, and then take appropriate actions. Yes, Harish.
Hey, Naval, thank you again for explaining all this macroeconomics in simple terms. And I like your monologue every day. It
Thank you.
kind of teaches us a lot of things that I don't think anyone will teach us ever. So I have a couple of questions, Naval. One is regarding the balance sheet reduction, right? So we always compare the numbers that are coming out of Fed meetings with some benchmark, like the economist or financial heavyweights. They will put out some numbers, and we always compare with them. So do we know like what is the expectation from the market on the balance sheet reduction? Are they looking at any numbers like $65 billion or
They're looking in the range of 50 to 25 to $50 billion.
okay.
That's
So
what
anything
I don't read any articles, but that's what I see. Because last time it was $10 billion from the equity, it increased to $30 billion or maybe $50 billion most.
okay.
Now, at that time, the balance sheet was only 4.6 trillion, and we did not have this kind of inflation. This time, inflation is going to hit 8.3. $10 billion from the equity. Yeah, if you're not speaking, mute yourself. It's a simple decorum. Please do not. That's why I'm just keeping Harish you open. So it's 8.3 CPI, which is expected. I think it will be more than 8.3. It will come in the range of 8.7 to 9. That's my expectation. This will force Fed to do 50 basis points in May and back to back in June. Not even in July. They'll do this. 100 basis point, that's 1%, is going to be nasty. It's seriously going to be nasty for the market. And they are just trying to show positiveness that market is in good strength, so that they can address all this. So again, if you do not trade tomorrow, that is totally fine. We have 200 days to trade. There's no point trading early in the market. Wait for 2 o'clock. Wait for an opportunity to read through what has been said. Maybe take a trade after 3. That is my intent. I'm not rushing into it.
Okay. Yeah, thanks, Naval. So like somewhere around $50 billion is the expectation, and anything more than that?
I'm expecting $120 billion.
Okay.
Including pre-maturity of bonds. It's not only equity, it's maturing bonds. So roughly I'm expecting $50 billion only in the equity. They are expecting $50 billion together. I'm expecting $50 billion only in the equity. So their range should be $50 to $80 billion. Yeah, imagine like you have to take down it's $4.4 trillion. If you do $50 billion per year, okay, it's going to be $600 billion in 1 year. To bring down 4.4 trillion a year, it's going to take 7 years. Just to be back pre-COVID, I don't think so that's going to happen. It has to be really aggressive. That's why they're coming and clearly saying it's going to be aggressive. So I'm expecting this much.
Okay. Do we know like how long this will take the effect on the market? Like If we are
Immediately.
going,
It will change the sentiment.
so does it last for like an year or 2 years? Do we know, like
See,
in the past, like
this move in Tesla is starting from where? No, SPY is better. Tesla is SPY. This is April. So here everything was going down. All of a sudden there was a demand which was late. Impact was immediate. Till the moment that money was coming, the impact was immediate. Right here, they said in December, and I reiterate myself, I clearly said around 15th of December about the ECB reducing their balance sheet, ECB reducing this stimulus, and FMC following that. 15th December, I remember that was the day. And I said it's going to be a brutal time. From there, we have already seen a big chunk down. And even in this time, the Fed was pumping money. It was 90 billion, 60 billion, and 30 billion. Now they're not going to do anything. There's going to be an increased supply, which I explained a few minutes back. So when there's an increased supply, the amount is going to be substantial. We have few gaps to fill, yeah. We have this gap right here. We have this gap around 400 that needs to be filled. Okay, we have one more gap. I'm not trying to create any panic, but I'm again saying understand what is going to be said and then take appropriate action accordingly. There are gaps at 300. There are gaps at 400. That needs to be filled. You see this gap on the left hand side?
yeah.
Right, this is the gap which needs to be filled. If anybody wants to check, you can go and check. The gap on the SPY is 398. So that's about 13%. Then there's one more gap. After this, right here, 337, 338. 338 is the gap which needs to be filled.
Wow, I think IRA accounts will be decimated. People might extend their retirement planning. They might continue to work for a few more years.
Again, there's no need to panic. There's no need. Market cannot vanish in a single day. If market gonna drop 2% every day in next like 50 days, market should be zero. Right? It's not going to happen. It's not going to happen. We might have money coming out from sectors which have received a huge amount of benefit from this. Second thing, there's a natural demand. Like if you are a 401k investors, there are many big funds who have money, they will invest. So there's going to be an equal fight from all those investors and the supply. Now, whoever has an upper hand will decide the market direction. It will not be a single side market up or a single side market down. It's going to be volatile.
Got it. Okay. Okay. Yeah. Thank you. Thank you. Now I don't want to take much more time. We are already like 10:40. Yeah. Thank you.
So just that we need to be very careful, understanding. Do not make our assumptions. Look at the price, what it's telling us. Look at the minutes. See, do not trust anybody. Read what is coming out from the FMC minutes. They publish a PDF, read through it. Read 10 times. Because the impact of it may not finish in just half an hour or 2 hours. It will continue. If they say there's going to be $25 billion reduction in the balance sheet, market will give a thumbs up. And yes, they're already looking for that. If there is more than $50 billion reduction, market will get thumbs down. And it's easier to sell than to buy. I'm just taking one last question. Yes, Suman.
Yeah, can you hear me now?
Yes, I can hear you.
Yeah, hi. Hope you're doing good. Thanks for providing this overview of the macroeconomics, right? So I have two questions for you.
Sure.
The first thing is we saw last year, right? Q2 of last year starting where the mid caps and small caps were like getting killed,
Yes.
and the large caps were the one holding the load and taking the index up. They were like trying to do some sector rotation and or whatever they call, like they're selling all these small and mid caps and
Going into
pumping,
stocks. Yes.
diverting that towards the large caps.
Yes.
Do you think it's there a possibility like once they start decimating the large caps, the money might rotate back into the small caps and mid caps to balance out the index? That way, to for the outside world, it shows as if nothing happened.
Mid caps do not manage index. That's the thing. Market watch, visualize, index, Dow Jones. These two companies take half of Dow Jones, right? Boeing, which make airplanes, which make rockets, which has been a Fed commercial, not commercial, like all the army related company. It is only $100 billion company, and Tesla is $1 trillion company. So do you think money will come out from Boeing? Possibly. How much? Maybe 20%. How much money can come out from here? 2.8 trillion. More than sufficient. So money will ease out from here. It doesn't mean it's going to go into the small caps. Look at Russell, right? Where do you think money will go? Nothing. I don't see. The small caps is a sector which is the last leg. If something has to bottom out, small cap will be the last one to bottom out. First one will be the large caps. So if money taken out from the large cap, first it should come out from the mid caps, which already happened in the last 1 year. Small caps, mid caps money have been decimated. They have been squeezed out. Tomorrow, it may be the large caps turn. Once the large cap bottom out, then we need to go into the mid caps. But good companies, they will go down, but they will recover. Bad companies, they will go down and they will never recover. This is the thing which you need to understand. Do not, because 90% of people think it has made 52 week, it will just jump back. It will go on making 52 weeks. Lows, 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 lows. And by the time you realize you're already like 30-40% down on your stocks. And I've seen so many people struggling with that. They've jumped into the growth stocks and now they're realizing, oh, Fastly used to be $100, it's here. Zoom used to be $400, it's here. Moderna is like that. Etsy was $300, Shopee was $1,700.
Roku.
Was $300, Roku was $500, $400. What exactly happened to them? Docu was there. There's so many companies. And they will not come back to those prices. Let me give you one simple example. Look at this company, Cisco. I'm going to 20 years or max. It was 82 in 2000. It never recovered. It took 22 decades for it to come back to 63. So do you understand what I'm saying? It's gonna take substantial amount of time to recover for those companies, those industries. And Cisco was the peak in the internet bubble. So need to figure out which companies can really, really move. Amazon was also there, but it was never in those valuations. Again, it started moving substantially higher when it started to increase its AWS and e-commerce, and there was Fed money which was coming in. Since 2012, 2013, the Fed money was coming in. It was going in directly. Boom, in 2018, 2019, it was taken out. Look at the condition of Amazon. Bang, it lost like 30, 40%. All the way from 2000, it came to 1200 something. So this is all Fed money. Mr. Singh, all these companies will be really affected. Moderna, Mentex. Moderna is not even a 2-digit company. It should stay like, look at Moderna. Again, people have moved into Moderna. I've been shorting Moderna since 450. I'm telling everybody, just short it. Moderna was like $19 in 2020 or $11. It went on to make 497. Now people must have entered at 497, 450, 400, 350. Do you think you're going to receive those prices again? No. It will never happen. I have burnt myself a good amount of money to come to this conclusion.
Nawal, one last question. Sorry. What is the Fed going to do with all the money after it receives, right? All these bonds, it's going to get it back.
Fed has that as, do you have a credit card?
Yeah.
If you spend money, what do you need to do?
Pay interest or pay it back?
So that's exactly what Fed had to do. Fed has a fiscal deficit, which is almost of $1 trillion, few $1 trillion, and they are spending approximately, let's check the fiscal deficit real number. I'll not federal fiscal. See, I'm explaining all these macroeconomics because 90% or 80% of people don't even know them. This is like 2021. Should be 2022. That's why you remember Joe Manchin is telling everybody not to do this build back power something, build black power, whatever it is, because it's going to end. Because if that happens, dollar will lose its shine and America will default. If you do not pay it back, if you do not have, this is the gap between their spending and their earnings. This is the economy of India. You cannot sustain that kind of debt on America. US debt for on people. The current US debt is 23.3 trillion. That is of February 2020. This is the total debt. It is $30 trillion. You can see this number. How, if you have this much, dollar will lose its shine. You're getting my point?
Yeah.
If you have a credit card bill, you need to pay the bill. You can carry on with interest until a certain time, otherwise you will get a default. Same thing can happen. And this is government of USA's site. It's not made up site. They have a revenue of $4 trillion, which is coming from income tax, from payroll, corporate tax. These are all details. and these are national debt. $91,000 per person, $250,000 debt per taxpayer. I hope you all have a clear understanding of what's going to happen tomorrow. So understand the FMC minutes, understand what is going to be mentioned in that report, take actions according to that. All right. So anybody has any last questions, let me know. Otherwise, I'll jump onto my analysis, quick 20 minutes, and I'll be done. Rajaram sir, you want to say anything? I have unmuted you.
Hey, buddy.
Hi.
How are you?
I'm good.
Yeah, I think I'm not going to do this.
You're not audible. You're sounding like it's talking from far.
Wait, can you hear me now?
Not clearly. I can, but not clearly.
My headset is not working. So I was just saying that I agree with you. I particularly think that NDS.
I can hardly hear you, sir. It's
Just mute me.
so let me do one thing. Let me just run through the scanners and session, and let's see what we can do for tomorrow. Again, I will not take any trade until 2 o'clock. Just be very clear. I'm not taking any trade. Microsoft has inside day, Netflix. So I'm going to reduce all this shit now. Microsoft has inside day. Netflix now. Netflix, Lulu. I'm going to get rid of BA. It failed once again. It will come back to BA once around 170. SC is out. Mara is out. I want to bring in Netflix. I want to bring in Lulu. Roku. I want to bring in Roku. All right, let me just go through this analysis. And again, guys, if you like my explanation, please do me a favor, share that link, share the link on the Twitter, which I'm going to do. Like it. If you like it, people will like Google algorithm uses it and they can use it to share to more and more people. Again, I'm not monetizing YouTube. If you want, I can show you right away. I'm not monetizing it. I'm just sharing the information because which I've learned over the years. Nobody taught me all this. I have burned myself. I paid so much money to the people to teach me all this thing, but nobody could actually explain. I've learned it myself by indulging myself deep into deep all this. So if you can like, share, I appreciate it. That's the only thing which I want. Okay. From ES. $45.20 is really important. Anytime 45.20 loses, it's going to hit 44.60. That's the area where you need to think. So ES is short now and neutral only if it goes above. Sell below 45.20. Stop loss is 45.35 because that's the area. Target is 44.90, 44.58. 60% short. Neutral is go and buy above 45.35 and stop loss will be 45.20. Target will be this 45.60 and 45.81. 45.20 if gone, do not fight the trend, be short. QQQ, so it's below 366. We will short it, and let me also mention the candle type. I missed that. It's a bearish engulfing candle. Usually it gives you two candles back to back. QQQ. Again, it's lower low, lower high, testing the 12 EMA. The moment it loses 359.40, we will sell with the stop loss of this area, 362.50. Short 362.50, sell below 359.50. Target is 353, 353.50, 350. 70%. Tech will have serious impact from it, and you will see the bond yield prices going on during that. So read through that. Neutral. If you really want to buy above 362.5, stop loss 359.50. Target will be 366, 370. Made lower low, lower high. Apple like kind of faked out here, lost this line. I think I will sell this below 175 with a stop loss. I'm just shorting it. Sell below 175, stop loss 175.50. Target is 172 and 169. The short. AMD like it's testing really hard. So I'm going to give one more go to AMD. If it loses 105, I think it's going to come back to 99. So I'm just keeping neutral on AMD because it has already seen some serious selling. Sell below 105. Stop loss 107.25. Target is 102.50 and 99. Can go long above 107.25 if it holds for 30 minutes or more. So I'm making all these notes very clearly so that a layman can also understand. If you do not want to use this, I think I cannot help, because people will come and ask me all this in the real time. I am a full-time employee. I have work. I have meetings. You can go through it. Amazon is coming back. See, that's the beauty of the 12 EMA. People are asking why I use 12 EMA. See, tested 12 EMA, 12 EMA, 12 EMA. You will not find any average which has been tested so beautifully. So 12, it's a complete inside day, a break below 32.60. I'm going short. Stop loss 32.75. Sell below 32.60, stop loss 32.75. There is no support until 31.66. 3200 as a round number. 31.66. 70% chance to go short. Can go long if 30 to 60 holds. I'll personally not go long in Amazon at this time unless I have clarity. Roku, this one I think is ready for some move. Again, it was trying to break out, failed. Maybe if it comes around 122 area, I would be a buyer on Roku. I am positive on Roku. I'll be a buy near 122, 120, 122 area. If it comes in that area, I'll be a buyer. Or if it breaks above this area of 132. Stop loss is 118. Target is 143, the gap which I'm looking for, 143 gap. This is the gap which is there, 143 gap. 132, 143. Baba, let me just check what's happening here on Baba. Baba is like coiling really hard. I'm just checking the price of Baba in Chinese market. It's down like 4%. I'm still positive on Baba. I think with all these impact, Baba is the least one which has any impact whatsoever. It has tested the 34. There's a gap which needs to be filled, which is right here at 105, 106. So let's aim for the gap fill, 105. So Baba, buy near 105, 107. Stop loss, 104. Target is 115, 127. I'm still very much positive by the dip on Baba. Twitter has filled the gap from yesterday after open. If it holds above this regression channel, which is this one, I think it has a gap to fill, which is around 72-ish area. 63. I think it was 72 as well. There was a gap. Yeah. So it might have a gap which needs to be filled. If it loses 46, it might fill the gap at 40, 142. Right now, I think 49 is a good support area. If you can enter around 50, target is 54, 55, which it did today. 53, 54.8. It almost made 54.8 in the like 54.6. So I'm going to keep everything same in Twitter. Why did Roku twice? Let's remove this. Facebook is another company which has no impact on from the Fed. So try to accumulate it. Again, you see the power of this trend line. It's holding this line so beautifully. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is coming back. If you get an opportunity, do not miss to add it around 224. I'm gonna wait and add this. Facebook was really positive. 224 is like superpower stop loss. Raj, when there's a low IV, that is there for a reason. So let's see if this time it can go higher or not. CAT, John Deere, LMT can move along with Walmart, yes. Low IV options, are there for a reason, David, because there is no interest in them. They are being sold. The IV is increased when they're expecting a big move. When the IV is low, people think that yes, IV should be around 40, 50 so that it's reasonable. If it is less than 50 or 40, I think it's being sold very clearly. So Facebook buy near 227 to 231 area. I am bullish on Facebook. Lulu, they have announced a split and the repurchase. They have a gap. It's making an inside day. I'll be a seller below 378. I'm just doing a neutral because I'm looking for the gap. Sell below 378 or better sell below 375. Stop loss 378. Target is 358 and 358. There's a good potential in 351. Good potential on Lulu. Again, it can be long above 378. Google, biggest beneficiary, but they again, look at the value of this line getting rejected. Bearish engulfing. The moment it loses 27.94, I think we'll go short. Let me remove this gap finder. The moment we lose 27.95, we have 27.50. Stop losses. I'll do the piercing pattern mid size. 28.20. Google. I'm neutral, but I want to sell below 27.95. 28.30. 27.45 and 27. Again, market, again, I'm saying if market reaches 45.35 and go up, there will be stocks which will take it up. So can go long above 28.48. Netflix also has an inside day. Lulu also had inside day. Netflix. Netflix has an inside day. It's calling between, like usually we call this as a bearish pennant. Like you see, we have a bull pennant where we have something. This is a bearish pennant. It's a bearish pennant. Let me also show you a better picture of this one. It's not a clean. You can see it's a bearish pennant. Downtrend consolidation, exactly something is happening here. Consolidation. So keep that in mind and sell this. Sell this below 378. Stop loss is 385. Short. Targets 371. Then 366. Inside the bearish and snow failed. They had bad endings. Same thing, bearish pattern. Sell this. It's also making an evening star. Snow evening star. Here pennant short stop loss 228. Sell below 224. Stop loss 228. This is that. Target is 212, 217 and 212. 17 to 12. Microsoft 315 area has been a pain for Microsoft. It loses 310. It's a fake break. It's holding this line. So sell below 310, 50. Microsoft, I'm still neutral. I'm not sell below 3. The low here is 309. 310, 50. Target is 307, 25, 303, 90, 60. Microsoft also has an inside day. Keep an eye. Can go long. Where there is a possibility of going long, I'm mentioning. Otherwise, it's sell on rise. Nvidia is a short. I even went short on Nvidia. So Nvidia, I told you all evening star. It's a perfect evening star. Continuation failed to LEMA. It's gonna fail this one. 255 was our target. It almost was there. It's gonna hit 241. And there's a gap which needs to be filled at 228, 230. So let's hit that gap. Sell below 257. I'm not looking at your comments because I'm rushing it. Stop loss is 261. 50. Target is 247. 50. 240. I am 70% bearish on Nvidia. UPST, it failed 113 one more time, and you see bang, it's 103. So 113 is really important. It will hit 96. So UPST, sell on rise. In 5. 109 is the stop loss. Target is 96. 87. Short. Shopify, I think I would watch it. Same thing, a bearish pattern, bearish engulfing 695, and I'm short. Stop loss 717, which is the target is 660, 625. Okta, for some reason it was holding good. It's holding there. So I would love to add this on 154. I'll keep this relatively strong. Tesla, it could not break 1145. And why? Look at this. That's the reason it failed. So this will be called as a fake breakout. It has a gap 1046, which is the gap as well as the EMA. It will hit 1046. And it will also hit 960, 1046 and 1006. Clear short, sell below 1000. T5. Stop losses 1100. Boom. Can go only above 1115. All right, one thing is left, which is CCL. I am positive on it, and usually they are not charts, but the long-term trend is there. I would love to fill this gap. The gap is 1935. I would love to add this by near 1950. Stop loss is 19. And target here is 24, 25, 25, 70%. I'm long on CCL. Stop listen. Buy leaves of June 2023. 25 strike. NCLH. RCL. All right, I am pretty much done. Inside day can be bullish and bearish both, yes. Thank you, Jeremy. Thank you guys for taking your time. Hopefully you understood. Mr. Reddy, I need to check. I'm actually getting exhausted. I have to get up 6 in the morning to get ready for my office. So sorry about that. So thank you for watching. I'll be posting this information on Twitter. If you like it, when you retweet it, please also put some comment on your retweet, like quote it, so that it can be used as per the algorithms. If you simply retweet it, doesn't make anything. You need to quote it, only then it gets shared properly. I hope you can all do that. It's 1 or 2 liners. That's it. Thank you very much. Good night. See you tomorrow.